David, Gold Royalty, what a great company, I must say. I went through your presentation before that interview and I really like it. So what makes a company so special?
Well, I think we're in high growth mode. From our IPO last year, when we launched with 14 royalties, we've grown more than 15-fold to 192 royalties across the Americas, with specific concentration in the two best mining jurisdictions in the world, Quebec and Nevada, where we have about 75% of the value of our business. We have the highest growth rate in revenue over the next 3 to 5 years, about 60% compounded average growth, which gives us a foundation to pay a dividend. 10 months after our IPO, we inaugurated our first dividend, paying just under a 1% yield, with the prospect for dividend growth quite high over the next 3 to 5 years as we crystallize all that revenue growth.
Wow, that's fantastic. What is cash in the bank? What is the debt situation of the company?
We have no debt on the balance sheet, a very clean capital structure, over $50 million of available liquidity. So we still have quite a bit of firepower to continue to perpetuate and grow our business.
Great. So what makes the royalty business so special? I could imagine it's a good protection, let's say, against cost inflation for sure, because you are not building mines, right?
No, we're not. But the industry certainly has to start doing that because reserves are down 40% from their peak in 2012. Production's declining. The industry is underinvested in exploration and mine development. So in this inflationary environment, that's going to be an overhang on mining equities, in my view, at least the producers. And time and again, the royalty and streaming companies have demonstrated through the ups and downs in the cycle, they provide relative outperformance. But particularly in inflationary environments where gold is going up, they provide you that top line exposure, leverage to the gold price, leverage to the exploration success of our operating partners, but complete insulation from cost inflation. When we're in double-digit inflation territory, that's a huge factor about where you deploy your capital in the gold sector.
Definitely, yeah, absolutely. And to deploy the capital in the gold sector, I think Gold Royalty might be a great idea. We have here a little bit of an overview. You said it already, 192, let's say, projects you have. You have already, 6 royalties, I think, which are cash flowing, so you're making money already. And maybe you can comment a bit, how did you come on the Canadian Malartic, maybe also Jared Canyon, Côté is the next big thing, right, coming in?
Well, there are a number of things that are remarkable about our portfolio. You talk about the 6 cash flowing royalties, but we have 22 that are in various stages of development. And that really underpins that tremendous revenue growth that we expect to experience over the next 3 to 5 years. Outside of that, we have a well-balanced portfolio from early stage exploration right through to mine development feasibility. So it provides us embedded growth for the foreseeable future. The beautiful thing about these 192 royalties is that they're fully bought and paid for. We never have to put another dime into them.
Wow.
And they will deliver growth for generations to come for our shareholders.
Wow, that's fantastic, and a lot of wealth also with that is for sure. So for example, with the Côté, how did you come on that?
Well, it's interesting. A prospector was selling that royalty, and they were one of the original stakers of claims around the Côté deposit. And our royalty is on Zone 5, which is the southernmost part of the main pit that'll be mined starting late next year. And it's in the highest grade portion of the pit. So it'll be generating significant cash flow right out of the gate as they start production in late 2023.
So you said it already, the growth is outstanding with your company. So what can I expect, let's say, as a shareholder, for example? What margins do you have? Because I could imagine it's a super lean business model, right?
It is. It's about 7 full-time employees, and we could run a business 10 times the size with the same number of employees. That's the beautiful thing about the royalty model, how scalable it is. But the other remarkable thing about our portfolio is the generational element of it, the foundational element of these long life deposits. We have a royalty in Canada's biggest gold mine, Canadian Malartic. We have a royalty in what will be Canada's second biggest gold mine, Côté. And then we have a royalty on the United States' biggest mining gold mine, Gold Strike. And we have a royalty, an exclusive royalty on the underground extension, Ren of Gold Strike, which is just published an inaugural resource of over 1.2 million ounces with 7 gram a ton material, which is almost 5 times the grade they're mining from the open pit.
Jesus, wow, that sounds fantastic. So there's no wonder you are the leading growth company in the sector, right?
It's not just growth. Yeah, absolutely, we have the highest growth rate. But again, with those chunky, long life deposits, multi-decade deposits, Canadian Malartic, Côté, Gold Strike, we have an annuity that our shareholders are going to enjoy for decades.
Absolutely. So that's also one question I wanted to ask you. 192 projects. So that means, or let's put it that way, how many projects do you think will go in production as an average every year over the next, I don't know, 10, 20 years probably?
Well, on average, it'll be 2 to 3 a year. We have 22 that are in development,
Yeah.
and that's really what underpins that growth in revenue. So every year, we're going to have nice, pronounced growth, as I said, 60% on an average basis, on a compounded average basis in revenue. And that means a lot of these projects that are in gestation, in development, in construction, will deliver cash flow growth for the foreseeable future.
And what you're going to do with all that money?
Well, we're returning capital to shareholders already. I mean, it's remarkable,
Yes.
10 months after our IPO to launch a dividend. It shows you how successful we've been in executing our growth strategy of rolling up the sector, bringing in smaller players to create scale quickly, drive up our multiple, drive down our cost of capital so we can compete for the best royalties in the world.
Wow, that is fantastic. Super, I like that. Thank you very much for the interview. All the best for you, and we look forward to more dividends and maybe share buybacks.
That's great. Thank you.
Thank you. Yeah, ladies and gentlemen, that was David Garofalo, the CEO of Gold Royalty. And you heard that the company is in perfect shape. After 10 months of the setup, they pay already dividends, approximately 1% yield. The company has no debt, lots of cash, and 192 projects for royalties. So 6 cash flowing assets already, 22 are coming up within the next years. So I would suggest you really have a look on that. My name is Jochen Steiger, Commodity TV in partnership with Lukas Copy TV. Thanks for watching us, and bye-bye from Switzerland.